Administer dividends, issue or repurchase of stock. Administering dividends, issuing stock, and repurchasing shares are important treasury responsibilities because these activities directly influence capital structure, shareholder value, liquidity management, and long-term financial strategy. Treasury professionals evaluate the organization's financial position, cash flow generation, growth opportunities, and shareholder expectations when making recommendations regarding equity-related activities. Dividend distributions provide returns to shareholders, while stock issuances raise capital for expansion, acquisitions, or debt reduction. Share repurchase programs allow organizations to return excess capital to investors and potentially improve financial metrics such as earnings per share. Treasury teams work closely with executive management, boards of directors, investor relations, legal departments, and financial advisors to ensure these activities align with strategic objectives and regulatory requirements. Dividend administration involves planning, approving, and distributing earnings to shareholders in a manner that balances investor expectations with organizational liquidity needs. Treasury professionals analyze profitability, cash flow forecasts, capital expenditure requirements, debt obligations, and future growth opportunities before recommending dividend payments. Organizations may adopt stable dividend policies, target payout ratios, or variable dividend approaches depending on business strategy and financial performance. Treasury teams coordinate with transfer agents, financial institutions, accounting departments, and investor relations personnel to ensure accurate dividend calculations and timely distributions. Effective dividend management supports investor confidence, enhances market credibility, and demonstrates financial strength while preserving sufficient liquidity to fund operational requirements and long-term strategic initiatives. Stock issuance is a significant corporate finance activity that enables organizations to raise permanent capital from investors without creating mandatory repayment obligations. Treasury professionals evaluate whether issuing common stock, preferred stock, or other equity instruments represents the most effective financing alternative based on market conditions and capital structure objectives. Equity offerings may be used to finance acquisitions, support growth initiatives, strengthen liquidity, or reduce leverage. Treasury teams analyze valuation considerations, investor demand, dilution effects, and market timing before recommending an issuance strategy. Collaboration with investment banks, legal advisors, accountants, and regulatory authorities is essential throughout the issuance process. Effective stock issuance supports organizational growth while balancing financing needs, shareholder interests, and long-term financial flexibility. Share repurchase programs allow organizations to buy back outstanding shares from the marketplace or directly from shareholders. Treasury professionals evaluate repurchase opportunities when excess liquidity exists and management believes the company's shares are undervalued or when capital structure adjustments are desirable. Repurchases reduce the number of outstanding shares, potentially increasing earnings per share and other shareholder value metrics. Treasury teams assess the impact of repurchases on liquidity, leverage, credit ratings, and future financing flexibility before implementing buyback programs. Market conditions, regulatory requirements, investor expectations, and alternative uses of capital are also considered. Effective share repurchase strategies support capital efficiency and may enhance shareholder returns while maintaining financial stability and operational flexibility. The administration of dividends and stock transactions requires strong governance, regulatory compliance, and accurate reporting processes. Treasury professionals ensure adherence to securities regulations, stock exchange requirements, corporate governance standards, and disclosure obligations related to dividend declarations, equity issuances, and repurchase activities. Treasury teams maintain detailed records, coordinate approvals, and monitor compliance with board-authorized programs and regulatory guidelines. Communication with shareholders, investors, analysts, and regulators is important to ensure transparency and maintain confidence in the organization's financial management practices. Treasury management systems and financial reporting platforms support transaction tracking, compliance monitoring, and performance analysis. Effective governance reduces operational risk and supports accurate execution of equity-related treasury activities. From a CTP examination perspective, Candidates must understand the strategic, financial, and operational considerations associated with administering dividends and managing stock issuance or repurchase activities. Exam questions frequently assess the ability to evaluate dividend policies, analyze equity financing alternatives, assess dilution impacts, and determine the financial implications of share repurchase programs. Candidates should understand capital structure management, shareholder value considerations, regulatory compliance requirements, and the relationship between equity decisions and liquidity management. Knowledge of dividend distribution processes, stock offering structures, market conditions, and investor relations is also important. Mastery of these concepts enables Treasury professionals to support effective capital management decisions, optimize shareholder value, and contribute to long-term organizational financial success.